Today, folks, I used this credit card that is linked to my $10,000 line of credit to invest in the stock market. More particularly, I bought one stock with all of that money, and in this video we're going to talk about the interest rate, my risk tolerance, and why I think this is appropriate for me to do, which obviously there could be some learning lessons down the road that you'll get to watch unfold on this channel if you consider subscribing here, folks. And we're also obviously going to break down the stock I bought, my strategy that I'm kind of playing out with this, and how long I plan on holding the position. So in the clarity of my transparency, hit that like button, folks, and let's get right into this. Welcome back. Passive income investors alike to leveraging $10,000 from my line of credit into the stock market. And if you're OG to this channel, it's not the first time I've actually done this. I did it once going back in March when we saw this first initial crash with a company called Ryokan. In fact, I'm still holding that full position because I like the company so much. Instead of selling it to pay the credit off, I ended up just using my own capital to pay off that debt to keep the stock, which I'm currently trading up $1,300 on that position, including a very healthy dividend yield. However, this new strategy and position I'm taking on is going to be a pure play. It is a short-term strategy at which I plan on using whatever I get out of the capital gains to pay off the entire debt. But before we get too far ahead of ourselves here, guys, let's talk about the credit, let's talk about the risk, and why I think this is appropriate for me to be doing, and again, maybe not so appropriate for you, but this credit is leveraged at 4.9%. My dead basic interest payments would only be $50 a month here, folks. And when I'm talking about risk tolerance level and why this isn't appropriate for everybody, but the reason I'm doing it particularly is I don't have a family, I do not have a house, I really do not have high living expenses that my dividends pretty much can't already cover, and I'm backed by a $250,000 portfolio and a decent sized little bit of an emergency fund here, folks. So the amount of money I'm currently leveraging with this $10,000 equates to just under 4% of my entire portfolio asset allocation. So let's say the company I bought went 100% bankrupt tomorrow and I had to sell out of one of my other positions or use some of my cash to pay it back. It's really not going to hinder my overall performance in the long term, only being 28 years old. Now, I'm predicating all of this first to you because I don't want you to do something stupid and think, oh, Kyle's leveraging money, so I might as well too. You might not be in a similar circumstance where the risk tolerance would make sense. So do approach this stuff with extreme caution. And I'm just doing this to document to you guys kind of how all of this unfolds for me personally. Now, what did I buy with that credit? Well, it should come as no surprise that I leveraged it into a Chinese stock and a super hated company right now. Of course, I'm talking about Alibaba Group. I went ahead and I bought 32 shares. And we're talking about Canadian dollars here, by the way, so I had to convert it to US. Leveraged out to something like $7,500, at which I bought 32 shares of Alibaba at an average cost of $227.68. The stock has been bouncing around all day today, and again, we're talking about probably some of the most hated companies right now, guys, and many of you are aware I like when companies get suppressed. March was an incredible time to be buying stocks, and right now there are far few deals in between anywhere right now, especially if you're looking at things like Apple, Tesla. Like buying any of those companies, you're taking on a huge amount of assumed risk. But taking a look at Alibaba stock, guys, from its all-time highs after all this news has just beaten it into the ground, it is currently trading down almost 30%. It is trading toward levels it hasn't really seen since the highs of 2018, which kind of blows my mind considering its earnings have been blowing it out of the water. Now, the reason that I'm taking this risk on, because a lot of people are saying, oh, what about the news guys? China's attacking Ant Group. They didn't let them IPO. Alibaba owns like 30% of Ant Group. They're like, what about the investigations into the monopolistic behavior of Alibaba, which sounds very similar, if I'm being honest, to Facebook and Amazon sitting in front of Congress over the last year. But heck, that didn't affect their stock price, right? My current prediction on this company is it does not deserve to be trading down to the levels it is. I figure if it drops any farther, I couldn't see it dropping more than 20 or 30%. This is a company with over $50 billion in cash. It has over $1 trillion in merchant value, which in comparison to Amazon, that I think only has 500 billion, guys. This is in the e-commerce conglomerate realm here, folks. Also involved in cloud computing, also involved world in the electric vehicle space. Alibaba's got investments everywhere, guys. Alibaba from 2018, in literally 2 years, has doubled its revenue here, folks. And the thing that I think people are overlooking, because yes, this media and what is going on is Jack Ma missing. Yeah, it's scary because we're foreigners, right? We live in the Western world. We really don't know what goes on over there. But I always say that there's a gray area to all of this, guys. And for some reason, the pendulum like always swings to the yin and yang. Sometimes it swings to the bad side a lot worse than it actually is. And sometimes things sway way over to the good side, like we're probably seeing now with a lot of the tech companies here in Canada and the US. If you lived in China and stop getting caught up in the Western media clickbait of, oh my God, the billionaires are going missing, something tells me China looking at the US feels exactly the same way right now. We're talking about a president that is stirring the pot to a level that is causing people to storm the Congress building, and the president saying that the entire voting system is completely rigged. Like, you would be terrified to invest in the US economy, I think, if you were looking at it from the Chinese perspective. So I really don't think things are that bad. In fact, I think things are way better than the media is portraying them to be, because in this exacerbated pandemic, e-commerce is becoming the way of life right now. And considering we're waiting for Q4 earnings to come up with Alibaba, which is going to be February 11th, guys, those earnings are going to be for Q4 of 2020. And do you know what the best time for revenue is in the entire year? It's Christmas, guys. I mean, are you crazy? Like, Q4 is going to probably be a blowout quarter, even with all the bullshit media that at the end of the day isn't going to really reflect onto those bottom line revenues. And I think we're going to see the same out of Amazon. I think we're going to see the same out of Facebook here, guys. And if I had to put all of them in a basket together right now, Baba seems to be trading at the cheapest multiple. Now, this does come with still a huge amount of political risk, but I just can't foresee there being another 20 or 30% downside risk. But the stock itself in the Western world has a major buy rating. I mean, Jim Cramer says it's a buy. Every single analyst has a buy rating on it. In fact, some of the big analysts even lowered their price target based off the most recent news. And you know what that price target was? $380. So what is my strategic plan with this company overall here, guys? Again, just taking a look at the stock, I honestly predict that coming into these earnings, there's going to be a lot more volatility ahead. I don't know if the stock goes lower or goes higher, but after these earnings, it wouldn't surprise me if we see a 15 or 20% bump to the upside, followed by a steady recovery as this bullshit media kind of blows over the next 3 to 6 to maybe even 12 months. I do not plan on holding on to this position for the full 12 months. This is a swing trade for me. I just want to see how earnings goes. I usually would never play earnings, but when we're talking about the situation we're in, where things are just getting better and better for the online world, the fact that Biden is likely to lock down the US, the fact Canada's already on a lockdown, we have more stimulus coming into play. There's just a lot of factors that just scream bullish buy at these levels. Many of you know I already bought, Alibaba 28 shares right around this exact level, not even like a week ago. And today, guys, I was just rolling around on the floor and I'm like, you know what? A lot of people are waiting for a crash, but this company has already crashed. Its revenues are already absurd, and it's trading back to levels that just seem unnecessary for how fast they've grown since 2018. How could it double its revenues in 2018 and be trading back at roughly the same level here, guys? Like, I'm going to buy the crap out of this. Not that you should. I'm just documenting what I'm doing here, guys. Now, if this implodes in my face, heck, it'll make for some entertaining YouTube content that you guys will hopefully enjoy. So I pass the question off to you. In light of all of this, what do you guys think in that comment section below? This risk for me isn't that big of a deal. I know people leveraging $18 million in the market right now. You can go watch YouTube channels like Dumb Money that leverage absurd amounts of money into high risk plays. I don't consider this a high-risk play. I don't think the downside is going to be massive. The most I could lose maybe 20% if I sold the bottoms. But to service the debt at $50, $100 a month, to hold on to this for 3 months with the capability of making $3 to $5 grand, in my opinion. If I held longer, probably make a lot more money. But we'll see how I feel when we get to that point, and I'll update you guys thoroughly. So stay cool, stay awesome, and I look forward to catching you tomorrow.